Hi, just wanted to give a quick market update on how the positioning is working out here uh, in the futures markets coming into the open of trade early morning New York Stock Exchange times. We've got a time of about 3 p.m. here in Australia, and in New York we have a time of about 1 a.m. So if we have a look at the recent action, sorry, I'm in the 1 hour time zone here. Green is illiquid and tight market, meaning there's buying or accumulation, and red is a loose. This period here we can see in the irregular is a loose market, and we see price reductions. And here we have green, and we're not seeing price reductions. So what's going on? Well, we've got accumulation happening, even though we've got a dropping price, and quite a large dropping price. We've just come off OPEX on Thursday the 17th, so there's quite a lot of juggling of stock. The open interest hasn't really changed a great deal. We don't really see that after OPEX until the following 2 days, end of day option information data. But here I'm looking at a Pepperstone USD, US 100. It's a NASDAQ, so it's the top 100 NASDAQs. It's the same as the NQ. The NQ is done by CME. Now, if we look at CME, we have this same pattern here. We've had some quite high loose liquidity, and now we can see it's below the par line and it is tightening. This oscillation you can see here is just how regular liquidity is. This CFD here is traded in Europe. Europe and Asia are the grey colours here. Sorry, I'm looking at CME here. This CME futures are traded in the American market. So we have high liquidity in the American market during the day in these dark lines here in the lit markets, and then here in the grey in the overnight markets, we have very little price action and very little loose liquidity. When we even this out over a period of time to get irregular liquidity, it shows us where it's showing up. I'll just quickly have a look at that again, and you'll see it's quite the inverse here. So we have in the dark parts of the market, the lit part of the market, we end up being quite loose here. We haven't actually been, but it's been traded across the periods. There's not as much oscillation here in this CFD. So the CME products, switching back to it, the CME products are traded very heavily during the opening hours. Here we go. We just see every lit dark line there. The New York Stock Exchange hours has very tight liquidity. But really, we don't see that price discovery unless we're looking very close at surface liquidity. We'll just have a quick look at the other markets and see what they're doing. This is the ES minis. Again, we have a lot of tightening here in the market, and I think that we're just about to see a lot of price increase, and I'm really looking for an entry into the futures. Let's just see if there's some of this is hiding here in the VIX. So the ES was a CME product too. Here's the VIX. Again, I'm looking at a VIX index. This is a Capital Com CFD, contract for difference. And again, you can see it's tight. It's being traded really in the lit hour. So this Capital Com is a good one to look at as an American tradable product, and it's obviously being traded more in the lit hours than it is in the evenings. The Australasian and European Globex. And we can see it's a loosening. We've had a little bit of tightening here, but really the main mass of measurement here is a loosening VIX. We can see here it is quite loose. Now these are quite specific. These VIX they are traded in different time zones. So again, we can see here that this is a bit up and down, but it has been traded mainly in the overnight. In the lit market, in the American market. It's showing us something quite different here. It's showing that there has been during this period a little bit of tightening. Interestingly, they'll have different volumes. They'll be used by different people. So an aggregate of their volumes would give us a better idea of where the market is at the moment. As far as I can see, the market is tightening and we're going to see some price action to the north. Here is a Pepperstone, another European CFD, and it's been tightening for a long period of time. This is a Russell 2000, so the IWM or Russell 2000. Here's one other. This is a Rutty. This is a CME product. The same thing. It's the ES2000. Again, we can see good tightening here. It did have a loose period at the start of last week, the end of the week before, but it's really tightened all of last week coming into Easter. Again, I think we're going to see some real price appreciation. We've already seen Bitcoin move. Bitcoin had been tight all weekend. Bitcoin had come off a very flat period. The open interest was looking fabulous, and then going into the weekend, between the couple of, that I look at, Coinbase and the Binance, it did look very loose. But if you saw early over the last fortnight, we've had a real build during this period. I'm looking here in the hourly zone, and we've seen some real price appreciation. We can see it's come from very illiquid and then dropped very quickly in here into a very tight illiquid zone, and we've seen really strong price appreciation. I think we're going to see a really strong week in the miners. Anyway, I know that was a long video, but I'm just helping you to think about it. Liquidity isn't in every different future or CFD or stock that you look at. At times when we've had low liquidity like this at the moment because of margin rates and because of money leaving the United States and going into overseas markets, we don't see as much price accumulation. But I think here we've got a really big drop in Dixie. We've got Dixie down almost 1.2% here. I think that we're going to see a lot of that money hasn't not only gone overseas, that money is now being piled back into stocks. And so the Dixie mechanically is going to lose value. So I think that we're going to see a big price increase. So just remember, when you are looking at any particular ticker, always think of, when you're going to trade it, that you've got to look at the indexes first. The indexes and VIX are going to give you a much better idea of movement, even though your favorite ticker not necessarily going to move in exactly the same direction or the same size of movement as the indexes are. The real liquidity that drives them, any particular ticker, is the indexes that they're in and the VIX. So when you're looking for liquidity, trading an individual ticker is quite difficult. Sometimes they'll be very, very similar, but a lot of the time they'll be quite different. And so look at the index to make your decisions on your trading. That will give you a much better idea of how to go long or to go short in scalping on a ticker. So look at those indexes, use the ticker as your vehicle for the actual trade because you think you'll get better price increase or decrease. All right, thanks for that, listening to me for that long video. That was just a quick update on going into the market today. Have a good week's trading.